Good morning. This is Ken at Tortoise Capital. This is a review of the weekend trading report for March 14th, 2020. This is an interesting weekend report for sure, after a week in which the world stood still. We're in bearish normal conditions, and what that really means is that the volatility has been so consistently large that the what used to be volatile now starts feeling like normal. It's odd but true. So, bearish normal, that argues for a short-term orientation. All of the NDX look-back periods are all on the boundary of neutral. They all came out of the oversold based on the roaring response on Friday, and the futures look up large going into Sunday afternoon here. So I'm expecting a huge gap up. And if you look back at the debriefing from Friday, covering all of those short positions and not trying to hold out for more, sort of reinforces my point about shorter term orientation, trying to be flat overnight whenever possible, unless you're deep in the money, just because of the nature of the change in the world. So that's going to be the loss avoidance of having covered those shorts will be significant. And especially that's true over a weekend, right? So, meanwhile, the rest of the indicators, red bearish with 11.5% below the S&P, or the S&P's 200-day moving average. ADX strong bearish at 41. Risk Z, the risk index is at 0.6. The risk Z is -4 sigma, but rolling over. And so at some point, if you believe in the spring, the whole Z-score approach is going to be really important here. Trying to figure what the relative strength leaders coming out of the hole are going to be. And I think there's a short-term and a long-term orientation. The long-term orientation is to say, since the world just changed, and it's going to have an impact for the next 20 years on the psychology of everybody that just experienced their first life-altering event, we're going to be taking a look at social, economic, and cultural changes that will affect people in a significant way, in the same way that the Great Depression shaped people's opinions, because the conditions under which the pandemic occurred and then impacted the world doesn't change. I mean, when we come out of this pandemic, we haven't solved the problem of pandemics. That remains a structural challenge, in the same way that financial markets had to figure out how to deal with tightly coupled networks with additive feedback or reinforcing feedback loops. That's how you get those asymptotic results that threatened the world in 2008, 2009. You can argue whether or not fundamental structural changes were put in place to prevent that kind of rapid meltdown. The repricing that's gone on over the past week had a different feel to it than the uncertainties of the financial meltdown. I mean, there was always a clear narrative about what was going on and why. The responses were lightning fast, but there was not the same kind of psychological freezing that we experienced in 2008, 2009. So this felt like repricing and rebalancing, but there was still sort of someone at the wheel. This felt substantively different. So long term, you got to say, what are those long-term economic changes that are going to reposition who the dominant forces are going to be in the world? Is manufacturing going to shift from a central, efficient one point on the globe, China, to regional and national rebuilding of less efficient but more resilient manufacturing? You know, the role of 3D printing and flexible, adaptive, industrial-based response is going to be sort of an issue. So who are the companies that are postured to win that kind of a fight? Who are the high-tech, long-term, deep-pocket, innovative solution providers that can respond most quickly to this kind of global um, pandemic. Short term, you got to say, in the conventional models where people want to buy last year's and last decade's winners on sale, whether or not they're going to have a role to play in the future, whether they're going to be able to adapt or not, I don't know. But you just say like, U.S. steel is down, 30 or 40%. Are we going to get rid of all steel companies in America? Are we going to get rid of America's steel company when we're going to try to rebuild infrastructure with regional manufacturing? No, that's why I'm always interested in them long term. They have such an advantage uh, in terms of reconfiguring what it means to be a steel company in America. How do they lose? I don't know. So without even knowing if they have the ability to do that, you just say they have first mover advantage, and are we able to buy quality on sale? So I think short-term technical um, Z excursions then lead you to look for the pricing anomalies that give you value plays immediately. It's a longer-term issue to say who's going to be postured to take advantage of shifting economic trends. I don't know. So that's going to be on my mind in terms of the longer term swings and position sizing and trying to anticipate the future a little bit. So that's as I go through this report, that's on my mind as I'm looking for the kinds of opportunities that I want to do. 80% of my vision will be on tomorrow's trade and the week trade and how we get out of this particular hole, and watching the risk Z and some of these other indicators to give me insights into short-term movers. But longer term, as a strategist, what I'm thinking about is how do we posture ourselves for that and start buying the future on a 30 or 40% sale. And I'll give you this. I don't believe what I'm about to say, but I just want to make it as a representative of that. Now, suppose you believe that Tesla is something that's going to win in the future because of their demonstrated innovations. Well, you can buy them at 500 instead of at 950, where you had to buy them, 2 weeks ago. So that's a way to buy potential genius and on a 50% fire sale, so to speak. So that's the kind of thought process everybody's going through right now, is that if the world doesn't change, then money matters, and who the leaders will be for tomorrow and beyond matters. And so trying to get that price right for who survives coming out of the wilderness is on everybody's strategic mind. Meanwhile, the opportunity trading of increased volatility as people start repositioning portfolios incrementally, money that what kind of tactical money is going to flow? Well, it's going to be folks that were already in cash and want to buy on sale. It's going to be people that held in their mind too long and now see a bounce and are going to look to try to recover from the worst of the losses, and they're going to get some of their money back, and then they're looking to sell. So that was people who are white knuckling it over the weekend, who weren't sure that the future is going to be down 10% or up 10%, and when can I get out of these positions that they feel like they were in too long, and they took that risk. Been there, done that. So that's one of the reasons why when people get their trades back to zero after a big loss, they feel like, hey, I got all my money back, now I can justify leaving the position, and why you quite often see people selling just because it got back to zero. So are we going to see any of that? I don't know. That's the kind of tactical money flow that leads to short-term volatility, which is why that trade intraday is going to be available for the next couple of weeks for sure. So those are the kind of things on my mind. I just take some comfort in the fact that blended monthly rebalancing did what it was supposed to. You look at the positions it had us in at the start of the month. Blended monthly also starts showing us who the big losers were in the Dow. So let me just talk a little bit about Apple versus Microsoft as a technology play. Apple closed down all non-China stores, and with their manufacturing base locked into Asia, how easily and quickly are they going to be able to reposition to a different kind of production model compared to Microsoft, who doesn't have that same kind of issue since most of their revenue is coming from intellectual property? Much easier to adopt and adapt to a new world order if you're Microsoft rather than Apple, which is a commodity-based technology solutions and consumer driven thing. So how many people have discretionary money they want to sling around for the next Apple, iPhone, or whatever it may be? So to me, Apple is one where on the short term you say, well, everybody's got to own Apple and now I can buy it on sale just because of how much it's sold off. A longer term person might be looking at the real choices between Apple, Microsoft, and Intel and say, well, which one of those do I want to own for the next 20 years? And then look to see what kind of sale price you get on it. And that's more of a strategic and conceptual trade than just buying Apple on sale, which is kind of a knee-jerk response. So that's an illustration of the things that are on my mind. So risk Z, you see it's coming and starting to pause at the 4 sigma. Monthly market health check, the magnitude of that sell-off takes it all the way back to really just off the chart here. This low part right here, this support level was that is the Trump administration bull market right there, and 3/4 of that has vaporized, and it came within an inch of long-term fair value. So the entire Trump argument, if you will, is gone. So this rebound is here. If it opens where the futures show, that's another $25 higher. That gets it to 290. So that brings it to open up probably just above the Bollinger Band mean. And so this little whistling past the graveyard just shows you the magnitude of that move. We just dipped into fall on a monthly basis, but we're still even inside the Red River. So, in one way you say maybe this entire reaction was overblown. I don't believe that for a minute. That's people who didn't sell and are hoping to recover previous glory, but there you are. That's why it's a market. So the support levels here with the price here, you have Z1, Z0, Z plus 1. You have the PSAR previous support level. That would have been the price that anything above that you feel comfortable with if the pandemic hadn't happened. And that would sort of be, if it can close above there and hold above there, you might just say, hey, this was the anomaly, and now that's really the support level as people rebuild America and the world. And who's better postured to do that than America? Where do you want to bet? I know where I'm betting. I'm betting on America, just because. You don't, the champ owns the belt. It's his to lose. So there we are. Then the skin of the dragon and the PSAR are the same. The top hump of the dragon above 310, and you can start relaxing if you could ever relax. So there we are. Weekly basis, a little more refined. Prices come back within to Z2.5. There's Z2, Z1, 0. Plus 1, plus 2, the PSAR flip, the dragon frame, the fair value at 310. 310 feels to me like you get your head back above water. So there's still ways to go. There's still 31, 41. $40 on 270 is 1/7. That's 15% recovery, and that's really the this is still the danger zone. This is halfway from the sell-off back to the first place you feel like you could pause. So right at the 50-yard line. So don't get too complacent. We haven't seen even close to the peak of the, peak coronavirus in America yet. Like all of the spring break vacations of the military officers at our college were canceled yesterday and restricted to within 100 miles. And if some people had left early, are being pulled back, and so we're working on figuring out how to deliver the rest of the course through distance learning, and we're taking a hard look at how to do that for the start of the next year, because 400 of our officers were coming from Europe or Asia, and so there are fundamental long-term shifts into how this affects the college. Not just how we're going to teach next year, but it will cause us to rethink the basic economic model of why does it make sense to bring people together like that anyway, and how do we at least have a genuine alternative way to deliver that kind of service. Google and Twitter completely shifted to a work-at-home model, and you can do that in some places, but not everywhere. So, God bless the healthcare workers who are putting, their lives on the line genuinely and really. How do we convert the national infrastructure to order groceries online, have them delivered by the National Guard, Amazon, and the post office, to instantly shift to that kind of social distancing for the public good, so that we can slow down the propagation of the virus. We're not safe until everybody's kind of gone through it and the results are what they are, and you get herd immunity. Slowing down the propagation to allow the system to accommodate the treatment rates long term is sort of the challenge. That's what makes it manageable, although painful. It's pain we can manage versus being overwhelmed. It's the same issue you have building the sandbag walls for a river that's going to rise. You know how much water rained upstream, and you know what that's going to do to the river channel. Is there some way that you can compartmentalize and distribute that rising water so that you can accommodate it at the point of criticality, where you're trying to build the firewalls and the dikes and the sandbag walls and so forth? Anyway, so the Z3 excursion down here at 235 from the previous Z3, that to me was sort of the line that would be crossed till the world was fractured. It got pretty close at Z4, and now we're back to Z2.5, and now you can see that the daily. This is going to, if it doesn't change right now, this opens up 10%. So that's going to be 295. That's going to open up inside the Dragon and inside, like right at the edge of Z1, and you can almost argue that that's the first real chance to try to reconstitute the previous normal and stabilize the panic selling to allow management to just happen. That's the shot that the international banks and the sovereign wealth funds are taking to maintain the social and economic order, at the cost of probably $5 trillion on the first commitment, 3 from the Fed and 2 from the rest of the world is my unsubstantiated guess, with another $5 trillion ready to commit if they had to. So that's really the magnitude. There's $10 trillion potentially going to be swung in support of this, because otherwise, what's the alternative? What's the point of being able to have national and international debt if you can't respond to a 100-year flood? Rules. Yeah. Civilization needs to be able to transcend that. So I think that's what's happening. $10 trillion in support of this market, 5 already on the books, another 5 implied by the size of the first commitment. And that changes everything. How do you say that inside that much debt being floated, you're going to charge people for health care and college educations? You got to get every brain into the fight for the good of the world. And intelligence is not equally distributed by social economic class and what your parents provided for you. So god dang, let's be serious about this and unleash the power of the brains, and stop making this, well, I got mine and who earned what. That's just nonsensical. That alone is going to change the world as we know it. So if you haven't figured that out yet, then you're running for president in the U.S. The BMR portfolios, you see the magnitude of the losses. What's the economic driver that pulls Latin America out of the swamp? That's a tough one right there. Real estate suffered less, though not this week, but longer term. It was not a flight to safety, although it did lose a little bit less on the timelines compared to some of the globals. But that's not the safe haven that you would naturally expect it to be. Technology, healthcare, utilities, even the utilities, the safe haven of utilities, a 9% haircut. So all of the safe havens change their historical correlations under times of maximum strain like this. That's a lesson we would do well. Look at, I mean, the banks are already starting to enjoy that they're first in the line of receiving the cash. They're going to get theirs. Energy, reflecting the real economic slowdown. How long can Russia and OPEC decide to play a oil price war game while the world is trying to figure out how to not die? Are they going to call each other on the phone and say, hey, let's sort this out quickly and rapidly stabilize this and have a moratorium for 6 months? I don't know. That's a game of liar's poker for you. No real differences in those portfolios. So in the Dow 30, Apple, Microsoft, Intel. That's sort of, and JP Morgan. So if you were going to bet on anything coming out of the Dow 30, of course you'd say Nike. Yeah, there's enough shoes, and they're not going to nobody's going to need a Chinese manufacturing base. And Boeing, the only thing keeping them alive is the promise that America's not going to let the airplane producer and this huge national defense contractor go to zero. So I'm stalking the heck out of that in terms of that. And that's the argument for Boeing, Caterpillar, U.S. Steel, and these fundamental guys. So XLB is the way, and XLI are the two ways that I look at that as sort of a reconstruction of the and support to the national industrial base from a defense perspective. That's a way to think about it. And then banks. If there was only going to be one bank, is it Morgan or is it Goldman? Looks like people are voting Morgan. And then the triumvirate of Apple, Microsoft, and Intel. I mean, if I had to drop one, I'd say Apple. Your cash-rich days are over, and their charitable response based on how much cash they had and how much they committed to the public good was trivial, and I think they lost an opportunity for social branding. People are going to remember that. Sector spiders, tech, financials, regional banks, and this oil and gas exploration is really just buying a fundamental sector on a fire sale. So how much more downside is there? I don't know. Can that go to zero? No. I still think so. I think there's some, industrials and materials are ones I'm really thinking hard about. Still in a moment of advantage. Thinking hard. Oh, consumer staples. That's interesting too. So just thinking out loud is none of this is advice, but this is me thinking out loud across multiple time frames as a strategist. So the VIX, VIXY, and VIXM are going to get smashed at the open tomorrow. So there will be an intraday volatility play that will be something to see as shorts are going to get smashed. And that comes from trying to get every possible ounce of blood out of the turnip, and that's something that young, inexperienced folks have to learn the hard way. So that'll be some lessons learned tomorrow. What was that? 29%. Palladium. Wow. And just that's to me the anomaly of the the precious metals and the rethinking what it means as a store of value or as a defensive asset class really didn't do what it was supposed to do or what some people thought it might do. Let's see, gold, silver, bonds, U.S. large tech. all the defensive plays. Growth suffering, was green, now white. But I think that's buying. I mean, where else can you put your money if you want to own the future? I mean, the tech argument for posturing for the future is there. I don't know of a better way to figure that out unless you're going to try to stock pick the daily. No overreaction or channelings, and that's because of the price with respect to the 200. Now, this is where you get into the protective nature of those mechanical systems keeps you out of the market during these anomalous fat tail events, and that's why like 95% of the time they are so solid when they're in the market is because they're buying the darn dip. And then when the world is crazy, it just says the world is too complex and one-off to be able to explain with a handful of simple rules other than just stand aside. And that long-term is a pretty good idea. That's the compelling, enduring power of the argument of simple, mechanically applied rules, especially when you have something that says, can you recognize market conditions under which it's not appropriate to use these rules? Yeah, when the price is under the 200-day moving average. It's so much different and asymmetrical that you're better off simply to stand aside with that kind of discretionary swing trading money. That's what those rules are designed to do. That's the deep beauty of the apparent simplicity and robustness. It's not apparent simplicity. It is simple and yet robust in much the same way that caveman psychology is simple and direct. So the big losers in the Dow, Boeing, ExxonMobil, United Tech, Cat, and IBM. The big winners, Walmart, Johnson & Johnson, Verizon, Merck, and Intel. People need their communications. Got it. In the healthcare sector, Johnson & Johnson and Merck. In basic distribution of staples with a rock-solid business model, ton of cash and efficiency for distribution already built in, Walmart. If they don't get into the home delivery business, how do they not do that? How do you not take the slowdown of people from the service sector where that doesn't come roaring back and people need to be able to deliver? You combine something like Uber with Walmart's inventory management of physical staples, and you don't somehow connect those three things together, Walmart, Johnson & Johnson, Verizon, Uber, home distribution. How is that not a win? And demonstrating a social conscience, because now you start putting some healthcare people and you check in with people, you bring them their groceries, you bring them their meds, you give them face-to-face, you break that social isolation, and you provide a service. Now, why they're not on that already, I just don't know. So maybe we should do that. Is there an opportunity there? Yeah, there is. Boeing 7-1. DuPont and ExxonMobil. Are we going to need chemicals? Yeah, we're going to need chemicals. And they had big rebounds from being oversold. Not as big as Goldman and American Express because of the promises to look at the banks, you rat bastards. Sorry, that's my bias showing through. That's the consequences of and the implications of this election, by the way. Who are the sources for that first and second tier of administrative officials that are plotting policy ways out of the hole? You know, that tells you who's winning that fight right there. You know, Bernie Sanders, shame on you for not fighting harder for the people that trusted you. I just hope that a generation of people don't get discouraged and disenfranchised and disenchanted and disillusioned and disinterested in politics as a result of his failure to fight for what is right. Talk's a good game, no follow-through, no delivery. Who are the next generation? So God bless Tulsi Gabbard, fighting to the end and telling the truth, and is going to be a voice, I hope, for the next 20 to 30 years, given an alternative vision to the current corporate structure. That's non-financial insights there. That's just so you know my perspective. You should be aware of that, so you know where this is all coming from. I don't let that influence my choices on targets. I'm a technician when it comes to this. That's too important. ETF 30s, the Dow, the UDow just proved its merit as a bi-directional target of opportunity. That if you can get the market call right, UDow ain't all bad. Has the advantage of being anchored to the 30 greatest companies right now, and with its partner SDow gives you plenty of intraday movement that's anchored not in the psychology of the VXX, but in the actual fair market value of the underlying company. So there's a certain reason to love that. You know, on a day when the S&P moves 8.5%, UDow moves 26%. So there's a way in which you can find an engineering solution to a particular trade, and it's only trading at 57 instead of 270 in terms of owning the position. Just saying. There's more room in Brazil, 17%, hybrid frog champion. Daily pinch and stretch, it's all the same things. Mechanical systems. 4C, it just doesn't get any worse, so what's next? The dawn or the end of civilization? I'm voting for the dawn. It's many miles to go before we sleep, but psychologically I'm prepared for the recovery. NDX timeframes. Intel and Microsoft and JP Morgan were the big winner on the 3-day breakouts. That should tell you who people are buying. It's easier to move their manufacturing base, and then you get just financial engineering. It's all digits anyway, and then intellectual property, and then inside the physical technology, it's Intel. So I know where my focus is going to be. If I was not going to play XLK or XLF, so take a look at this. So you got oil and you have oil exploration on the 3-day look back or in the green, along with finance and technology in the S&P. So that is where the world is voting as safe havens. So you can play the sectors or you can play the companies. Take your pick. All the usual stuff. That's everything I want to cover. Take good care. I'll answer questions tonight at 8 or comments, but I want to get this out earlier so you have a chance to think about it. I compartmentalize really well between my political and social citizen positions and thinking about the world and my fundamental and technical analysis of markets and opportunities. Two completely different elements of my internal staff. Those wires do not cross. I am ruthless and relentless when it comes to exploiting short-term and long-term opportunities. I don't let political personal opinions get in the way of that. So just so you know, compartmentalization is rock solid. Take good care, guys. We'll see you in the chat room.